2022 has been a year of records, whether that's the transactions at the Lands Department, 92,000 in total, where it's represented 250 billion worth of transactions there as well. In terms of the split between secondary and off-plan, it's generally a 50-50, but there was definitely a surge into off-plan demand at the end of the year. Another record would be on the prime residential side, which historically we as Savills looked at a rate above 3,000 a square foot. Now we're seeing super prime rates achieving north of 8,000, in some cases 10. So you can see a huge difference in the price point of prime residential within the city.
We saw an awful lot of activity in 2022. 2021 was pretty buoyant off the back of COVID, but 2022 really began to ratchet up across Dubai in terms of the corporate and commercial office sector. That was driven primarily by an increase in demand for space in Dubai for a variety of reasons, but also in a lack of supply, and that really caused us quite a number of issues going towards the back end of last year. The supply for most of our clients is at the grade A end of the spectrum, and a lot of that take-up of the grade A space that happened in 2022 came from new entrants coming into the Dubai market for the first time, and the correlation between a requirement for a trade license and office space, the visa ratio requirement, all of these things mean that anybody coming into this market for the first time needs to take office space in one form or another. Another driver for the demand last year was really around companies looking to expand their operations within Dubai, and we saw a lot of our corporate clients relocate some of their teams out of Asia and out of Europe. Again, primarily because of the positive economic way that Dubai had handled COVID. So a lot of the demand that we saw in 2022 came from the financial and fintech sectors particularly, and that demand was driven into the DIFC really as one of the key sub-markets. And again, one of the issues with the DIFC, again, lack of new supply coming to the market. So there was a real drive on take-up across the DIFC. One of the other key sub-markets for us, aside from the DIFC, is Dubai Internet City, Dubai Media City Free Zone. And that's where most of our tech clients are based, companies like Microsoft and Oracle, IBM and Meta. And interestingly enough, last year, again, we saw new tech companies, new fintech companies coming into that particular zone from outside. And where we have seen those well-publicized global adjustments in real estate for some of those companies, begun to see those within Dubai Internet City as well. So where we've seen companies that are looking at potentially handing back some of their space or taking less space upon a lease renewal. Dubai Internet City has been one of the locations where we've seen that. However, that's balanced by the new entries that we've seen into those markets, so the take-up of that surplus space has also been very strong. But I guess if we were going to look at an average across our market for grade A stock, we would have seen somewhere around a 15% increase in rental rates over the last 12 months. Having said that, there are pockets of micro markets where we've seen rents increase significantly more than that, up to about 25% in some specific areas where we have a high demand and a lack of space. We're expecting that activity to continue through 2023, with a continuing demand from new entrants coming into our market across many of our sub-markets. And we are expecting supply to continue to be a problem for us. And that will result in rental rates increasing through 2023 and into 2024. The industrial sector, like the commercial office sector, was incredibly active through 2022. Where we were seeing some strong activity was particularly amongst oil and gas occupiers, where we saw significant uptake, which then fed through to support services for the oil and gas sector. One of the key themes for that particular market was that We saw a lot of new entrants coming into the industrial sector from other markets, so particularly from India, from China, and from Europe.
We look at the year ahead with caution but optimism. The fundamentals economically are still here. The appetite for and demand from a foreign buyer pool as well as a domestic pool is there. The quality of stock is growing all the time. So there's a real positive feel-good factor within the city. But there are also dynamics that we need to be aware of. Yes, there is growing interest rates, which are putting pressure on buyers in terms of managing leveraged property, as well as other economic variables in other parts of the world, which may have a domino effect into this market as well. So we look at it with caution and optimism. There will be markets and segments within Dubai that continue to do well with continued growth. And there are other areas within Dubai that I think will maintain a flat momentum.